how much of what you're doing on the tech space is in-house and how much of it is working with startups, acquiring startups, or investing in startups?
It's a combination of all of those things. I mean, I remember last year here, I was on a panel similar to this, and there was one particularly impressive, arrogant startup on that panel, and who really believed, we're going to completely eat the lunch of the banks. And what I said is that the key thing is fintegration, it is partnership, it is being humble enough to recognize that there are fantastic new capabilities and new practices, agility, co-creation with clients. So we learned by going to Silicon Valley and sitting with fintechs, with startups. They had their customers co-creating the process, an end-to-end view straight through, and we now do that routinely. So our latest capabilities in the States we've developed, we've had 2,500 customers co-create what is now live production capability in North America. And built into that an open API infrastructure so that you can quickly port in new capability. We have dozens of fintech partners, and it's an open system. So you can choose open, you can choose closed. If you choose open and you recognize that the future is a direct model, then you're going to attract talent from these companies, and indeed, some of the banks have acquired startups. Others, we have hired folks from those startups.
But there was a bit of criticism, for example, of Citi when it released its mobile app in 2016, and you said, only a certain section of our users can use it, and people said, well, this is still the banks not getting it. You can't just release an app for a certain section of users when you've got these challenger banks and whatnot bringing out apps that anyone can more or less sign up to. Is that still the case now, a year and a bit later? And have you learned lessons from that?
Yeah, well, what we did is actually, I view it as a very positive thing. Historically, what we would have done at Citi is we would have had a 3-year program, and we would have built, technology that served everybody, and we would have got to market late, and it wouldn't have been exactly what the market wanted because the market had moved on. What we did when we set up FinTech is 72% of our wealth segment were iOS users. So we built for iOS, first of all, and we delivered it. We now have both iOS and Android, so we serve everyone. We would like to have gone live for everybody, but we viewed that the new way of working, that solving for the bulk of our clients and fast following with reusable services, which is what we did, was the way that we did it. And we did something else that was aggressive and very different from what a big bank would do. When we set up FinTech, we said we're going to be delivering this capability, which was the first credit card banking and brokerage advisory app integrated for our biggest market. We're going to deliver it by December 16. And internally, people said to me, you've taken so much risk. Do you realize the risk? You missed this thing. You're yesterday's guy. Well, I'm still here. We did deliver it. And it was very stressful. But we learned a ton of things. That's what you would do if you were a startup.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.